You were listening to chartingwealth.com for Friday, the 3rd of March, 2017. Everything is down. Stocks are down, gold and bonds. Let's jump right into the S&P 500. We still have a run-up on our two-day chart of the candlesticks. We are still well above the two-day trend line and well above the weekly trend line. We see that we still have a spike moving up on the S&P 500 regarding the PPO, the price percent oscillator. We are seeing a little bit of a loss continuing in the derivative oscillator. It's just slowly devolving. But our main indicator, the price percent oscillator, the PPO, is moving up strongly. So, of course, anyone who is in the S&P, we are still in that trade. Now, it is to note, the market was down for the day 0.63%. Now, of course, if you were in on the 2-hour chart, you did have a crossover going down on that. We had a nice knock up. If you jumped in, that is, you're doing our traditional method, you saw the chart knock over at 10 a.m. back on the 1st, you would have jumped in at the opening point of, let's see, the opening of what, 237.59. It went up as high as 240.32. That's pretty darn nice to see that happen in just a day. And again, why does that happen? Because your weekly trend is moving up. Had a crossover many weeks ago back and months ago, back on the 25th of November, right around Thanksgiving of last year. That's how long we've had a weekly vertical crossover going. And of course, you have the two-day trend is also going up. So whenever you have a pullback and a recross, that is your jumping in point. When it pulls back, you don't look to write it down because as we look at the S&P 500, good little lesson for you, when it crossed over going down back on the 22nd, it actually went up for a little while, spun down, went up for a little while. It really just tracked sideways. But then when it took off, that was your jumping in point. But quickly, it rolled back over again. It was the exuberance from Trump's speech that happened, of course, on the day that the day after that the market really boomed. We saw that happen throughout the day on the 1st, and then he spoke on the 28th, and of course of February, and then the market petered off. That just lost a little bit. You can continue to see how it goes, but it did cross over at the end of the day. Now, if you're still in, do watch in the morning on a real short chart just to see what happens, because what happened, the exuberance just sort of wore off. Some people took some profits. That's what we see going on there. So let's go back to the two-day chart, and we will go into the Qs down 0.50%. Still well above the weekly, of course, and the two-day trend line. Tracking sideways, however. So we do see on the PPO actually might be moving down a little bit, although super high. Derivative oscillators continuing to lose energy. Again, just be cognizant of what's going on. Have had another crossover at the end of the day after the exuberance bumping things up. We can see that we have a divergence in play. Market's even higher, but if you check out where the price percent oscillator is, it's lower than it was when the market was actually lower. So the market reaches higher highs, but the PPO doesn't do it. That is what we call a divergence. We see the PPO moving down, whereas the market price is moving up, which typically means you don't have sustained price movement there. So again, be careful. We've hit as high as 131.68. And again, we don't have anything, though, telling us we have to get out. On the two-day chart, we're seeing some weakness, though. Again, we're seeing some weakness, but no alarm bells saying you've got to get out. Weekly chart is continuing to move up, but it is leveling out on the derivative oscillator also. So again, if you're not happy with $11 of gain since we had our weekly vertical crossover on Friday, the 6th of January, there is something wrong with you, my friends. We'll see how much longer this goes up. Okay, now let's go from the Qs. We're going to go to bonds. Now, remember, bonds are typically inversely correlated. That means they move in the opposite direction of stocks. And of course, after the president spoke and stocks boomed, we saw bonds go down. And how much more did they go down throughout the course of the day? Well, they went down about half of what the S&P 500 went. They down around 0.36%. We did have a longer candle and they recovered some. Still don't have a crossover going down on the 2-day chart. And of course, the jumping in point, we are right at that, actually have exceeded that a little bit. So those of you who had jumped into bonds originally doing your weekly vertical crossover, it hasn't pulled back on the weekly yet, hasn't even pulled back on the 2-day. But again, we do see the momentum flattening. We see lots of indecision on the weekly chart, and we see the derivative oscillator pulling over. So again, words of caution. If you've not already taken your profit and run, you're starting to gain a bit of a negative there. Now again, you can jump back in if you so wish. You can use the 2-hour chart if that offers an opportunity in the future to jump back in if indeed we see TLT turn back around. But continuing to ride it, there is caution that it may continue to move down. Do pay attention to what goes on in the market as things get moving tomorrow, not in the idiot hour, but around 10:30. Just see what's happening if you've left anything in TLT at this point. Of course, we did have a good, 2 or 3% increase. That reminds me, if you've not listened to our monthly profit report, we'll have a link in the show notes so that you can actually listen to that for February. Pretty amazing. We're up over 15% for the first 2 months of the year. Well over 10% for us in February, well over 5% for us in January. It is a boom time for us here at Charting Wealth, and we are very proud of what we have shown so far. Lastly, let's check out gold. Gold also tends to move in an inverse pattern to the market. Usually that correlation changes. It's not always as dramatic. Sometimes they move together, but typically gold and bonds are a safe haven when the stock market's not doing well. Well, the stock market didn't do so well today, but gold and bonds were also down. Gold was down again. Remember, gold crossed over on the 2-hour chart all the way back 10 a.m. on the 28th and has continued to do that. It, of course, popped through pretty significantly, moving down in the morning through our 2-day trend line. How does that play out on the 2-day chart? Well, we actually are getting very, very close to a crossover going down. Derivative oscillator has lost its energy. It is moving down, hasn't turned red, but does look like the 2-day trend is getting ready to reverse. Hasn't happened yet. It could bounce off, still above the weekly trend line, but some notes of caution there on gold. Of course, if you didn't appreciate the jumping in point around 115 going as high as $125, come on, my friends, that's just greed. Things went wonderfully well in gold, all the way up there right to the end of the month of February, starting all the way back in January. And again, don't forget, we do have the ability, if we see a rotation back over moving up in gold, just like we said with TLT, with bonds, if they rotate back over going up strong, you can always use your 2-hour chart to dump in. Why? As long as the weekly and the 2-day are still moving up. You're having a pullback right now, and you can sure ride that back around if it occurs. That's where we are as we end the day on Thursday as we go into Friday the 3rd of March. Hope that you are enjoying yourself, practicing every day, filling out your daily market worksheet. Don't forget, close of the market tomorrow. Sometime over the weekend, we'll be preparing the comprehensive weekly review and forecast. What do we want you to do? I want you to have that weekly chart, that weekly market worksheet. Make sure you fill that out after spotting what's going on the weekly charts. Remember, that's the only time over the weekend that we fill out that weekly market worksheet. The rest of the time we use the daily market worksheet. All those are available in your show notes. And if you don't already subscribe to our podcast, you need to. How do you get it? Well, preferably you go to chartingwealth.com. You put in your first name, last name. We send it to you for free along with PDFs of our daily market worksheet, weekly market worksheet. You'll also get a link to our video, How to Read a Stock Chart. You'll also get the layout that we use at freestockcharts.com. You'll also get the ability, my friends, to text the words Charting Wealth, actually one word, Charting Wealth, our name. Text that to 33222 so that you can receive notice of our weekly vertical crossovers. You don't know what that is? Go to our training at Charting Wealth. You'll see a little course on weekly vertical crossovers, maybe 10 minutes. It'll give you everything you need to know. They are fabulous and I almost said magical. They're not magical, they're mathematical. How's that? And they tend to give you a great feel for true change in sentiment and great times to get in the market, whether it's for an inverse down play or for the typical up play. It's worked so great on the S&P, the Qs, that's the Nasdaq 100, gold, and bonds here over just the last couple of months. Thank you so much, my friends. You want to help us out? Please subscribe to our podcast at Charting Wealth. Also, you can do that at iTunes. Give us a 5-star rating. Say something nice about us. You guys have made us as popular as number 6 in the world with stock market podcasts. We so appreciate that. In addition, please, we're almost up to 2,000 subscribers on our YouTube channel. We really, really need you to subscribe there. That will help us in our metrics. Also, you can follow us on Facebook, Twitter, Instagram, like I said, YouTube, you name it. We are there for you. And you can always email us from the website, chartingwealth.com, or just cw@chartingwealth.com. We always try to respond. God bless. Take care from all the team here at chartingwealth.com.